Hello, everyone. Welcome to the closed stream and welcome to another big red day. Obviously, it's, as we suspected, a bit of a sell-off here in the stock markets. The volatility has risen again. So for anyone that was looking at yesterday's close, didn't really like that level because it came into our box, you've probably done all right by sticking out of the market today or potentially having short positions placed. Let's have a look at the Nasdaq. So here we go. Actually, we'll start off with the S&P 500. So here's our box zone. If you're trading the session today or you're trading the futures, obviously this is the easy kind of level to be in. Around this zone here is certainly the short area, and it makes sense. I mean, look, we hit our area, we hit the zone, we saw it suck in many call traders. The euphoria was real. People were feeling really good about the world. Suddenly it was all buy, 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 buy. And now it's sell, 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 sell. But then the question becomes, where does the sell end? Oh my goodness. Someone says here, I'm losing on the Nasdaq today again, with happy, sad faces. Oh, that's not so good. Jaron says you called it. Yeah. Well, we kind of expected that this would probably occur. Whenever you look, I mean, the data was pointing that way. We looked at the data. Just for anyone that hasn't been viewing our channel, let's quickly go through the data, then we'll get into the technical analysis. So some of the big data points are these. So these two here. One of them is big rallies can't necessarily be sustained. I mean, this is a very significant stat. You're talking about going back 50 years plus and seeing 2-day rallies at the end of the month and it pointing towards a weakness in the next month. Well, that's pretty big stat. Then on top of that, you've also got the other stat, which is also pointing towards weakness. A massively bad January tends to fill into February. And there's some other things that happen in January. If it's weakness in January, we'll talk about this soon. Some of the things for the year, it really does usually turn out to be a bit of a trader's year. Something about January declines, they tend to lead into up, down, all around types of markets. So here we have another 33% positive month for February, another spillover, mostly negative. And you'll notice sometimes, look at this January weakness. Look at the final 11 months here. Yes, it's 67% high. Yes, we're still positive on the markets. But with midterm elections, with everything else, it might not be as fantastic as some of the other years have been. Remember, none of these years, or not many of them, are midterm election years. And we know the stats aren't great for that. So we've got the big earnings result coming out. Obviously, after the close, we've got Amazon, we've got Snap, we've got Pins, we've got Activision, we've got Unity. Many of these stocks you like a lot. And these ones will probably further drive sentiment. We'll see whether Amazon can hit or miss. What's the general consensus of everyone here? Do you think Amazon will hit or miss? Evan says, Amazon up, Christmas shopping. Well, there's a lot of things that can happen. I mean, we've got increased costs of shipping. We've got all sorts of things. You'd probably think costs have gone up. That could drive some weakness. So here's the S&P 500. Here's the daily candle currently, obviously weakening here. Where do we expect the market to finish selling off? Is it here into the close, or is it a little bit lower? Well, I think that once you go through it and you just think logically, you would have to think, yes, there might be some buying around this level for whatever reason, but it's not as strong as, let's say, down here at 44.40. So this is where we have the resistance could equal support, and be looking for the turnaround. So let's get our new box open, in terms of a box for day trading open more than anything else, or possibly even investment if you see the right things happen here. And this is now an area of interest. So basically, this is what you do as a technical analyst. You just find areas, you set alerts. Then when the market comes into that zone, let's say you had short positions, you might descale some of those short positions. If you're looking for further shorts, you're looking for it to break through this resistance. Once it gets through there and it breaks it to the support, like basically the support side, you'll see further sell-off down to the next level, which is 42.80. So yeah, That's all you're really doing. You're basically just saying, where is the most logical conclusion for this market to go to? And at this stage, you'd think it's around that 44.40, hitting the resistance. We'll find whether it can bounce, whether it can create the double bottoms, whether it can create like some kind of wick that goes up, whatever. Buying pressure here. If we don't see it, falls through. Next stop, 42.80. I wonder if you all agree with that one. What hope for Amazon after Facebook, Netflix, and PayPal? Well, they're slightly different businesses. So we just suspect that Amazon might be weak. We don't know that. I don't know. I'm not a soothsayer. The only stock that I really thought would do okay was probably Google. And that's only because I'm involved in the YouTube space. So, yeah. Someone says, isn't this exciting? It's got the popcorn or the fries out. Yep, it's certainly a highly volatile time. And these types of markets, you can make a lot of money from them. I mean, people that have bought down here or even bought here on the Monday and sold into that 45, 50, 46 just because they had a plan, well, they can make some pretty good percentage points. I mean, think about it. Already, from top to bottom here, we've dropped on the S&P 500 2.5%. Let's have a look at the Nasdaq. So the Nasdaq's weaker. I mean, you can tell here it's much, much weaker. The market is coming already down to an interesting area. The problem we've got here, and you'll see it straight away, is which market do we trust the most? I'm going to ask the chat. Chat, which market, if I was to say, hey, I'm technically looking at getting some kind of indicator from the market, I want to know which one's going to give me the best signals most of the time. Would I use the Nasdaq or would I potentially use something else? Got Andrew Saya becoming a new member. Thank you so much, man. Appreciate it, bro. Thank you, Andrew. Welcome to the community, man. Welcome to the whichever class you are on. I'm going to have a quick look here. Appreciate it very much. Becoming a Stonk Squad member. Thank you, man. All right. So people are saying here, SPY, SPX, S&P 500. Some people are saying IWM. IWM might tell you the overall health of the market because it's showing you the small cap companies. But in general, the best technical level is always going to be the S&P 500. The 500 companies gives you the most likely really good technicals. Then it would be Nasdaq. Then it would be IWM and the rest. Sometimes even before IWM, I might even use Apple as well. Though at the moment, Apple's been uncharacteristically strong. So US 100, we need to use the indices right now. Like we always say, when VIX is above 20, what you're best off doing is finding key levels of support or resistance on your major indices, then going and picking up the stocks based on your major index work. And it's really that simple. Yeah, it's not as hard as people think. Keep it simple, guys. Some people go into stocks and they're like, oh, my stock has hit support. Yeah, if your stocks hit support, great. But guess what? If the S&P 500 is in the middle of a limbo land and you're thinking it's going down another 200 points, should you really be buying that stock that supposedly hit support? Because you'll find that most of the time, and let's see if the chat can let everybody know this, what a big level it would be. Again, logical. Most of the time, if the S&P 500 continues to fall, your stock will go through your support and you'll get bashed. And that won't be very cool. Gareth Evans says, KISS, keep it simple, stupid. That's right. That's the one we want to use. And SMUSA says, like the stream, people. Appreciate that, man. 650 people joining us here for the close. Markets are into support for the Nasdaq, okay, and into a miniature support on the S&P 500, but not the major. So these are areas where you could see buyers maybe slightly grabbing it in the close, but overall, you've got to have your commitment plan, and you've got to say, okay, do I want to buy stocks here, or do I want to make a decision when it comes a little bit further down and hits this level, or I see the turnaround story? And that's a tough decision sometimes during these falls. You're certainly in a zone that makes sense in the Nasdaq. but not on the S&P 500. So yeah, I mean, it's going to be a tough close. I think that if you were interested, you could always consider it. You're still getting a much better deal. Top to bottom right now, Nasdaq has lost 5%, which is pretty significant. So investors for the longer term might come in and see some stocks that they like. Let's move over to some of the other stocks that are holding up okay and some that aren't. So Tesla's doing pretty well, 0.88% down. Not much of a sell-off here. Could be a bit of a warning because if the market goes again tomorrow, what do we expect? Probably expect Tesla to do worse. But right now it's holding up. People are buying this thing. So they are certainly buying this thing. It's not in an area that I like that much. It's obviously on 900, bit of a psychological zone. Previously, we've seen that. Let's go down to the 15-minute chart. Not really anything strong all week here in this chart. Kind of got like a bit of a range. We know there was a lot of calls here. We know that there are a lot of puts that are probably underneath on this stock. So that one's interesting. Let's go through some of the others. Oh my goodness. Am I reading that correct? 7.26% down for the Amazon, back into the support. Ouchie, ouchie, ouchie. There it is. 7.26%. Thanks, Facebook. Google down 3.4%. Maybe it's going to fill that gap. This should be a relatively strong stock, though, coming out of any pullbacks. And there's a few reasons. Even though it looks, oh, I'm not getting a bargain or anything. Remember, you've got really great EPS. Yes, guidance might be hard to hold up, but the market's going to like it. And you've got a split. So do remember that overall, there could be some really great opportunities in Google, even with the ridiculous price in comparison to the rest of the market. The sentiment will still relatively be high. And we always talk about this idea that if stocks come in with high sentiment, they often hold up better than you expect. Microsoft trading at 302, so another one that has fairly big sentiment. Apple not moving at all. This frankly terrifies me, this stock. I don't trust it. Does anyone else have trust for this stock right now at this price, considering what it's doing? It's down 1.15%. It's being treated like a massive defensive. A defensive that is trading at a PE ratio that is almost all-time highs. So a PE ratio that is almost all-time highs, a very expensive PE ratio. I don't trust it. I like Apple. I think that if you held it for 10 years or 5 years or 3 years, you're going to make money, of course. I feel that way. I don't think we're going into a big bear market that's going to sustain for years or anything like that. I've talked about this quite a few times, but I don't know. That is not a stock I'd be looking at buying right now. Apple is being held only by short-term option buying. It's very likely that something like that. And Koa says they just had the best report on record. And what does that tell me? It doesn't really tell me anything. I mean, I know they've done well in India on the iPhone, but their price is also the best on record as well. Yeah, I don't really fall into the trap of just reading the headline, report this, report that. I want to know guidance. I want to know current PE ratios. And while you all feel maybe that valuations don't matter, I can tell you on most stocks, other than the higher stocks, which valuations certainly didn't matter until recently, these valuations matter. And I'm prepared, if I'm investing, to chill and sit back and relax until things come back. Just like after you get these types of runs, you can feel a little bit, scared. Here's the split, obviously, sell by the rumor, sell the fact. And then you can just chill for a while, and it did nothing for ages. So, yeah, that stock's pretty expensive. Great stock. If it's in your portfolio, I don't blame you. It's in most people's portfolio, of course. Fantastic, but not cheap. Not cheap. Any other market conditions that are interesting here? Well, 2-year continues to drive higher, 1.18%. Certainly one of the factors that made us think that the market might turn around again. This thing isn't dropping yet, which is one of our prerequisites for the market to go back up. And we've got the 10-year as well, which is up 2.3%, 1.82%. Interesting. And the dollar index continues to drop here, even with the interest rates going back up. Very weird. Now, that's strange. I mean, basically back on the support trend line here. So we'll have to find out how the DXY handles that. False break to the upside. Conservative entry never got triggered. Did a webinar about that on Wednesday. Yeah, unfortunate, but it is sometimes what happens. Gold not doing anywhere near as well as you'd expect it to, considering, though it did have a nice little bounce today. But considering what the DXY is doing and the weakness there, you would think gold should already be at 1840, 1850 again. This is incredibly disappointing. A very nice buy week probably does create a buy opportunity at around that 1811. Because that's a significant sell-off with a big bounce. And if it closes around here and it gets into a new peak and has that follow-through momentum, gold really could be slingshotting. But what a trash thing it's been. So we've got about 11 minutes here till the close. Let's go through some stocks. We'll quickly read some of these comments here as well. Square getting belted. Oh, yeah, I was checking that out. Square back down to $100. Look, I've always said the same thing on Square, and I haven't bought it back. I don't have it, just for disclosure there. I do not have this stock anymore. I think I made that perfectly clear over here when I absolutely hated, and I will repeat this, Jack Dorsey lost his mind. He's insane from this perspective. He buys title. What's he doing with that so far? He buys Afterpay, the worst purchase I've seen in some time, proving that he was behind in the markets. And I don't even know why the markets thought it was good. I have no idea. This is so expensive. Why do I hate this? This company, okay, whatever, that's fine. No moat. It is absolutely one of the worst purchases I could think of buying these companies. Maybe it'll pay off, but I think it's the worst. And that's my opinion. And of course, we're all entitled to those things, so why not? Daniel Polk, $3.69. Some hex for crypto lovers. Oh, crypto already, man. We'll probably do crypto just after the close on the markets, but we certainly will come in and do it. Thank you very much. Thank you very much. Mohammed says, would you short Tesla due to the bearish technicals or not yet? Probably wouldn't bother. I mean, the thing with Tesla is it should be falling more. And yeah, you're seeing it, but you haven't got a new low yet. So really what you want to do is generally with this, you're saying, okay, we've got some peaks. We know that's a technical kind of moving average that's been resisting. And I think you may have already started scaling into a short, but your real trigger isn't until you get underneath this low, because that kind of gives you that peak, trough, lower peak slightly, and then lower trough sequence. I mean, that's just the way I do things. You can do it any other way. Does it look weak? Yes. Is it behind the market? Yes. If the market continues to sell off, Tesla will also fail. And yeah, US 100 crashing. Yep. US 100 going down there. US 500 is the key. Jobs in the morning, right? That's correct. Jobs tomorrow morning. Tom says, will Amazon beat, guys? Well, let's ask the community. What do you think? Low Yilang says 243 shares of Square at the price now at 110 be basically bought after pay price of 39 billion. Yeah, but I'm pretty sure that's 39 billion Australian, wasn't it? It's about 20 something. Look, I always go with this theory and philosophy is if you're purchasing a company, let's say you're worth $200 billion. Oh, actually, well, we'll go with 120. We'll use this scenario. And then they spend like $26 billion buying another business. That's a significant portion of your overall valuation that is already elevated, yeah? So realistically, if you believe that this is already elevated and maybe it could go to 80 billion, this 26 billion is still 26 billion. So this is incredibly expensive. And this is when those acquisitions go terribly wrong. If you're a company that's worth 100 billion and you purchase a $2 billion company, oh, nice. It can't do that much damage to you. But when you purchase something that's such a significant portion of your overall market size, you better know exactly what you're doing, because I've seen businesses die from doing this kind of thing. And I always look at it as a big warning sign when you're purchasing a quarter of your business into another one. And if you ever see like 100 billion, and maybe someone can show me something that's worked out here, I can't remember one, and then they purchase another company for $100 billion. Oh, no, 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 no. Be worried. Be scared. I have never seen that work out well. I've seen bankruptcies come from that. Headed to 900 in the chat. Please support the likes. Thanks very much, Monica. Always a great support of the channel. Appreciate that. So let's see what people thought about Amazon. Amazon going to tank hard. No, Amazon in Wyckoff phase, heading a lot lower. So let's have a look at Amazon. Wyckoff phase has been claimed. So basically this, multiple false breakouts. That's what they're saying, to get kind of that huge rally or huge amount of money in, and then the sell-off, gets caused through breaking through the support. And then the idea, I guess, of something like this would be all the way back down to like a 2,200, 2,000 for Amazon. It'd be pretty brutal, but certainly kind of possible here. Amazon guidance will destroy the stock tonight. Well, I think guidance will be the key more than the result itself. I tend to agree with you there. And Koa says Amazon puts are too expensive. There's a lot of price volatility in. Oh yeah, that'd be incredibly expensive. A 7.68 switch coming into it, plus the Facebook result. Yeah. Speaking of Meta, where are we? Hello, Meta. 26.51%. So that's the biggest, almost one of the biggest one-day losses ever for a billionaire. So Zuckerberg would have lost a significant chunk today of his fortune. 26.49% of his entire net wealth, pretty much down. Wow. So Facebook's probably looking like it might even go down to the 200s, the 220. And I had a look at some of the parts of the report here. The big problem with Facebook is that they're going and they're not laser focused. And a lot of people are saying this about Tesla and Elon as well, which is, and we'll go with the Tesla idea, that Tesla is meant to be focusing on their core products, but now they're all over talking about robots. And it's robots are going to be quite a while away. I mean, this can't happen tomorrow. It's going to be quite a while away. So people want them to laser focus here, do this, but don't tell investors about it. And I tend to agree. If you had a 10-year project or a 5-year project, maybe don't talk, just say, yeah, robots, but don't talk about it too much, because you scare the market. Elon's more likable than Zuck. Yeah, that's true. That is true. Yeah, Andreas says, I jumped on Facebook at 240. Might have jumped the gun as an investment, though. Well, I think you're making an investment-based decision. I mean, you might go there and say, okay, it's trading at 17 or 16 PE. You know what? I'd buy a lot of companies at 16 and 17 PE. That's pretty cheap. So if you believe that's fairly cheap, then you're looking at it going, okay. Well, I've got a growth story. I'm going to hold it. I got the diamond hands, but don't go into it saying, oh, tomorrow it's going to fill the gap and I'm going to be rich. It's not the time to say, let's buy the dip, everything like that. Remember, if you go into it, an investment or anything, and you don't have an entry, a take profit, and a stop loss, then you've got problems. This is a trade. And if you just have an entry and you've got a longer term plan, then have a longer term plan. But don't think tomorrow is going to be the day. It may be, but don't think of that, because let's just have a look at Netflix. And you'll notice it's almost taken off a lot of those gains. So this is a good, oh, yes, buy the dip, but it's coming right back down. Then we have some cautionary tales, obviously. Snap down 23%. This is, this stock. This stock, I don't get this stock. Never did. I don't even know how they make money. But anyway, I'm a boomer. I don't know how Snap works. I know how TikTok works better than Snap. This stock was weird. But yeah, there's that buy the dip. Didn't quite work out for everybody. Seems like a lot of people feel like these social media networks don't have much moat on them as well, which is interesting. Because it is relatively cheap to start one off. But then, of course, getting through to everybody is the tough part. And also staying relevant is the tough part as well. Daniel says Facebook is the new MySpace. Yep. We'll do your super chat a little bit later as well. And Snap is very weird. Yeah. And here it is. Edwin says social media do not have any moats, Tom. Well, I hate companies without moats. And I don't have Facebook. Well, I guess I do because I have Nasdaq. And I have investments in those conglomerate kind of things. But yeah, anyway. So market's falling off here at the close. Everything's selling into the close. We'll find out in 2 minutes what it's going to be. Are there any other stocks that are interesting here? I mean, the problem with today is it's really more of a day for bears than it is for bulls. I mean, are we hitting key supports? Not really. Did we have yesterday a really good sell zone? Well, we talked about the hanging man. And if we look at the Nasdaq, let's just quickly load the Nasdaq up here, NDX. You'll notice that hanging man kind of coming true, where you've got the hanging man, you've got the bearishness, and that tends to lead actually to further bearishness. Let's go through and see if we can find some other examples of the old hanging man. There's one here. There's the bearish close. It went bull and then kind of hanging, didn't really hang man here, but it did the little rejection, and then we got another sell off and it went down a little bit further. Now, they're not that common, but when they do happen, you probably should be paying attention. So it doesn't mean that every single one is bearish though, yeah? It's all about making the new low from that form. And once you do that, that's the significance of this candle. It's all about being in an uptrend, then seeing the hanging man. And I'm just thinking, here's one that was an excellent hanging man. That's the classic one. Oh, yeah. Look at this. I remember that one. Now that was an easy one. Bull, 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 bull. Hanging man. Bearish. Goes underneath. Boom. There we go. Damn. Damn. 916 people. Thanks so much for joining us. If you like our content, then of course, make sure you subscribe. If you want to learn more about technical analysis, the way we do quick fundamentals and everything to do with the data coming out, that's what we do here. I can't believe BTC hasn't fallen off a cliff. Yeah, holding up amazingly well here. Well, we'll look at that after the market closed. Frank says, I can't see clearly what is a hanging man. It's this particular candle. So it's a bullish move followed by basically what looks like a bullish hammer for many people, or a pin bar, usually a very small top, if any, body, and a wick that's at least 2 to 3 times larger than the body. Okay. And then the idea is it's kind of just like this weird bullish looking candle sitting in the middle of nowhere. And then the next day goes bearish and goes underneath this level. And what that does is it's kind of like an engulf or another type of candle pattern, like a rejection shooting star. It's showing you that the market went up on false pretenses. Effectively, there was this supposed rally. It's like seeing a fake rally on the charts. That's probably the easiest way I can say. That's like a false rally or a euphoric kind of move that wasn't real. And it's designed purely, it's actually a trapper candle. So, yeah. Okay, so we get the close here. Big buy at the end there. It looks like super buy, actually. That last couple of minutes, boom. 5 minutes, bam. Look at that. Holy moly, that's a big buy into the close. So that's definitely Wall Street purchasing, no doubt. Look at them go. Can still turn around quite easy, but that is a huge purchase. Someone just bought big. I mean, you don't just move the market like that after hours. I mean, look at this 1 minute chart. We'll watch this side by side. Whoa, Amazon not miss, guys. Someone give me the EPS. That's why. Guidance probably still key. Yeah, it's Amazon for sure. Amazon up 12%. Yep. Traders lose? I don't think so. Well, I mean, I don't know. I wasn't trading Amazon. But it's interesting. The consensus was so negative towards us, and now it's come out with a 16% gain here on the close, all the way pushed back to resistance. Now, I wouldn't FOMO that too much. I mean, basically, it's come back from a support area to a resistance zone. The market has liked it. Guidance will be the key here. But yeah, that's a massive move. I mean, 17% obviously on any stock is big, and that'll be pushing quite a few through. So let's have a look here. Let's go to settings. And we'll bring up a few other stocks. I'm just interested to see whether it's pushing others. So it's not going to push their socials. Let's have a look what it does to Etsy. 4% up after hours. So Amazon smashes straight into resistance. The market itself pulls back around 45.10. So back up, only down 1% across both. That's a big switch, 1.5% in 3 minutes. Tom, wouldn't it be up again tomorrow on Amazon? It may not be. I mean, you got to remember the jobs report comes out at 8:30 a.m. So now it goes to jobs. So that was obviously a beat, kind of relaxes the market to a degree, though Amazon just goes straight into resistance here. So I wouldn't say that I would see a rally from this point. We'll get guidance. Guidance will tell us a little bit about what's going to happen as well. Remember, it's not just the result. Let's find out guidance. So that's going to be fairly important. This is at resistance. I mean, for it to get here would be insane. So yeah, it just smashed straight into resistance. I'm not that confident in that. The other thing that I would be doing is I would say, okay, what's the jobs numbers now? BTC moving up. Probably will be. We'll take a look at that soon. Amazon press release, Nasdaq, Amazon Q4 EPS of 27.75 may not be comparable to consensus of 354 watt. Yep. Okay, that's interesting. Must be something else in the report. Here we go. We've got another big one coming in here. Amazon Q4 earnings revenue 137 billion, expected 137 billion, so on target. Sees Q1 revenue being 112 to 117, expected 120. Will price of Prime membership in the US, monthly fee going from, yes, as we suspected. That's the one thing I certainly suspected. I talked about that. Price has gone up on the Prime fee, and then of course, will they do a split? We'll find out soon. I'm not won over by that, like overall in terms of this level. I mean, if you're into this level, I could see that being a big TP for a lot of people. I mean, it's pretty sweet. If you gambled on that, damn. But what happened here? I would say 80% of people were negative onto the sentiment. The market drove down. And then, of course, it kind of just met expectations to a degree, slightly underneath. And then it rallies. Isn't that funny? It always does what the consensus is against. And that's because I guess the market packed in a massive short. I mean, basically, this market was down around 27%. That being said, I think it's at resistance right now. And the market will probably go a little bit lower here in the futures action. That was a massive buy. A huge purchasing here coming in. That's one for, you don't often see that kind of huge purchasing. It's a 1% in the close on the S&P 500. That's a lot of money. And here it comes back down a little bit. I like, you look at this, I find it hard to believe it can hold it. That's such a big hit. Like, if I saw that and I had Amazon individually, which I don't, but if I did, oh man. Yeah, I mean, as a trade, damn, I'd be pretty happy with that one. Problem is, even with Amazon nailing it, didn't nail it, it sounds like. The market just kind of goes, yeah, it's not as bad as we thought. Most NAS stocks are down for 2 days. That's correct. Guidance miss. Yep. Pins up huge. Okay, so Pins would have come out with its earnings announcement. Been pretty cheap. Up 22%. So what did drop 10, then went up 22% back to 30. So Snap will probably be moving a little bit with this as well. Actually had Snap go. That's out today as well. 1.18%. I guess maybe the result's not there. So Amazon, cool. That's awesome, but we'll find out. Market rallies here into the close, but again, don't be won over too much by that rally. And it looks like it's another after hours report based move. Even the Nasdaq now has come down another 0.3% after that initial euphoria. Pins probably the most interesting one that might hold up. I could see Pins holding up just purely because it's such a beaten down stock. So if that looks a lot better, the market might be confident in it. But yes, this, look at it, already diving here quite a lot more. Was up 17%, has dropped 5% from that peak. It went too fast, too quick, too hard into the resistance. What a day. Whoa, what a day. Damn. 29.05 post. Yep, Google up 1.82%. I'd want to probably look deeper into the Amazon earnings, but it doesn't change my opinion. It went up too much. That was euphoric, that move. Wouldn't mind having a look at how Shop ended up performing off that as well. Yeah, well, 6. So all the consumer discretionary sector would have gone up hard in after hours. Oh, they total had that. Are we able to check the Shop chart, or is it happy to super chat? Just need to set up. Yeah, so Shop chart's fine. Shop chart's tough though, because you've got basically a 20% double bottoming base. So you've got this accumulation base here. Are you at support? The answer is yes. Are you at recovery? You can see the recovery. 20 moving average daily. You need to close above 1,000 for it to really start ramping again. And that is a bit of an issue because it's $1,000. It's quite far away. I mean, you look at this on a weekly, it doesn't look good. And it could go lower because this stock is still very expensive. You got to remember where it came from. $140, went to $1,700, and now it's trading back down. So the base is not necessarily in, and I'd be very careful around the lows because that candle isn't looking great if it closes down here. And we'll know that in about 1 day. So the story for everybody, we've got 900 people here. Amazon just posted results. They were in line, if not slightly underneath what expectation was. Maybe the market was pricing in some serious pain on the stock. It ended up doing a monster switch here, ended up 12.57% after hours, which is pretty significant. But it went straight into resistance, which is going to be the main problem. We look ahead to jobs now, 8:30 a.m. New York time. That's going to be the big important here. The market switched from 44.70 to 45, which is a 1% movement up. And if we go over and have a quick look at the Nas, that was the big mover here. The Nasdaq really plowed hard. Like that went crazy. That went up 1.82% in a few minutes. This is a 1 minute chart, so you can see it. Probably would have been hard to catch that rally unless you were buying investments or trades in this box zone here. And I don't blame if you weren't. So that's going to be a bit tough. Still very volatile. VIX is still incredibly high. Nothing really changes there on the markets. S&P 500 still looks overall weak. I'm not sure I'm convinced of that rally. Okay. Look at that 10-year, 1.83, 2-year, 3.63 up, almost 1.2. The overall signs, regardless of Amazon, are still weak. The jobs number is the lynch here. Let's find out what happens with the jobs number. Also consider what this candle pattern is. I'll bring that into today's video. All right, so we had a question about crypto, and we had specifically a question about Hex, it looks like. So we'll go to Hex. So super chat, thank you very much for the super chat. Let's go to Hex US dollar Tether. All right. So with this particular one, nice little channel, holding up relatively well through the little channel. Not sure how much I would technically trade this because I think it's more probably based on announcements, hype, that type of stuff. I don't really get hex that much, but it is there. Let's have a look at the horizontal support. So you put that in, you put in the resistance, you'd get the distance here for this particular one, and you basically say if it closed above, then we should be able to go long into that kind of 28 area. Okay, so nice consolidation base. Look for volume as well as it breaks through. All the standard things we always talk about. Let's move over to the Bitcoin market. Thank you very much for the super chat, by the way. Let's move over to the Bitcoin market. So Bitcoin fell off, then rallied a little bit there at the end. Let's look at the last 5 minutes of trade. Rallies slightly with the Nasdaq. Not too significant in terms of anything that's happened here. If you are a bit of a day trader, nice level here, 37, 140, 150. Base forming, resistance, 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 support. So you know it's a pretty key level. Could be a nice little trade off that low if it does occur. And obviously some people are going to be trying to buy this low here into that resistance. So I think they're the two key levels. You've got your supports. I'll put the horizontal right on the correct supports. Oops. Of course I did that. Where are we? BTC short slightly up as well, just so you know. Look, this is not the chart that I still think looks strong. This is a chart that looks kind of like a flag, almost breaking down. Some people have put that out. I don't blame them. I'm probably still partially biased towards the upside just because I know it can ramp at any point. But we have a downward trend. We have a daily 20 moving average. We haven't closed above any of those things. And until we do, I'm not convinced of anything towards the bull side. I just can't be. How can I be convinced here when everything's pointing towards more negativity? Even the volume's really low, which we expect over Lunar New Year. Remember, the year of the tiger. And in general, these types of events can cause this. Turtle, RuneScape, 99 cents. Thank you so much. Appreciate that, Turtle. Thanks for that. Gary Saini says, Tom, can we have a look at F? They missed, and I think we can confirm a head and shoulders. All right, we'll check that out. Just quickly do Ethereum here. Ethereum still hovering around that resistance becomes support line. We didn't get the break of the high, which just again shows you why you should be waiting for that little bit of extra confirmation or scale small positions in. So yeah, a lot of problems for Ethereum at this point as well. Just in terms of it needs to turn around, it kind of needs to do so now. So let's have a look at F, which is forward. They missed. I still can't believe they ran so hard, all these automakers. So somebody is saying here, or Gary is saying, confirmed head and shoulders. So basically the idea is you've got a compression left shoulder. It's a bit rarer in head and shoulders. You've got the head itself. Then you've got compression bit of the right shoulder. And then he's saying, of course, decline from all of this rally. And it makes some sense because motor companies are, in general, terrible investments. It doesn't take a rocket scientist to figure that out. Look at these results over time. Very boomy, very busty. One thing I'll say about all car companies, in my opinion, is that they have seen massive sales that are artificially inflated, which we will then go into people buying EVs a bit, for sure. That will accelerate. However, the inventory of people that have bought cars already is really high. I think the average American has some, massive level of car ownership, like 3 per household or something. The average Australian has a really high as well. So pretty important stuff there. And the head and shoulders confirms back to about 1260. That would be massive if it happened. I never go with a bearish head and shoulders getting the distance, but because it's underneath support and this was such a great support, you would think that Ford could be going all the way to 16 town. Just another negative stock to pack on to a bunch of other negative stocks. 16 also where the daily 200 is. So yes, there's probably a trade here, like maybe a rally short, something like that. Thank you very much for bringing it to our attention. Snap up 30%. Well, I guess they sold off too hard, hey? There it is. I still don't like the company. $34 into the earnings result. 38% actually now. That's a significant gain. If you bought these ones, like pins or snap, I probably would have been more prone to buying pins. Would have made less percentage. Then congrats to you. But that is a still, this is not even though it's 38%, it's not even that much respite for people that have bought this dip, because they've bought so many prices. They're happy, but they're still so sad. So some good earnings here, getting the markets back. You'll notice the US 500 now only down 0.9. It's rallied back up after hours. I'm still not convinced jobs number needs to come through. Certainly, it has improved sentiment. You can see here the futures. Let's go back to Amazon. See what that's trading at now. Wow, it's gone back to 17%. I'm surprised. Where's that put at 32.65? Yeah. Okay. Going to be a really interesting Friday open. Really interesting. Because that's still, I still think that 3,200. It's big. Got Zid coming through here. Canadian, $6.99. Can we all just laugh at the unironic? It doesn't take a rocket scientist to figure out the auto industry. That's true, Zid. Yep. Or maybe it does. Darth Vader says, I want to TA the hell out of oil and gas. Okay, we can have a look at oil and gas soon, Darth. What a wild day. Pretty crazy. I mean, that is insane. That rally, look at it. Look at this rally. And if you're looking at it on the NDX, this is really tough now, because if you're looking at it on the Nasdaq and you're going pure technical, that is still a hanging man. Yes, okay, I understand it went back to like a support zone, but that is still a hanging man. The SPX is still an incredible weakness candle. Fundamentals have just kind of shifted it back up. Oh, what a tough one. Still down on the day. Yeah, wow. Interesting. NFL says Amazon earnings call hasn't even started. Maybe we will cycle back and forth a few times and settle out. I tend to think so. Yep. And then Iona says jobs number is going to be bad, but we are going to rally. We are going back to bad news is good news for the market, and the Fed will soften. That's a good argument, I guess, there. Gordon Poljak, Sec 200. Hey, Tom. Want to show some love for your TA. Thanks so much. Sold my dot auction rewards Moonbeam. Returned €22 per dot, which is amazing. And Akala listed last week. Personally, yeah, I got some of that. Personally think BTC is in a descending, broadening wedge. Much love. Thank you very much, Gordon. Appreciate that, man. Thank you for your support as per usual. And we got Daniel as well coming in $5. That Sprouts farmers are doing okay. Must be over my head, that one. Must be over my head there, Daniel. Thank you again, Gordon, for your very generous donation. Appreciate that very much. But Tom, Nasdaq up 100 after hours. I know it's a hanging man, but Wall Street loves to close at support. Well, that's true. They do. And now they've traded the futures. Well, look, the fundamentals are taking over during earnings season, but the volatility is still there. That's why I say it's hard. Like, I mean, you look at a technical analyst, reading on this chart, and you'd be bearish, on the next session. That's just the reality of what you would be. You would be bearish on the next session. But what we know is we're in earnings, which pretty much ends this week in terms of the big, big, big stuff. There's still stuff coming, obviously, but yeah, the big, big, big stuff. And we had a surprise result for the market. The market isn't inefficient enough to not price in those types of things. I mean, Snap, Pins, and Amazon are all up double digits. So that's what makes it hard. The technicals are saying short, 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 and the fundamentals then just kind of rallied. And this is where you've got to have your idea. Do you continue to short? Do you continue? I mean, we're not changing our long status for the end of the year. I'm just sticking with the February is, kind of sidewaysy. And then we get that gain into March, into April. That's what I feel. I have said that since the start. And my call for the end of the year still remains positive. S&P 500, 5,000 plus. Soint 100 says Sprout Farmers market ticker symbol is SFM. Oh, okay. Didn't even know this was a stock. Is this a good stock? Hey, it's got a little breakout. Look, it's been there for so long. Yeah. Okay. It's like a massive breakout. It's like a giant Wyckoff. I mean, if you were looking at that, that's a multi-year Wyckoff accumulation. The max pain and the resistance, and then you expect a coil, and then the breach. How weird. Well, yeah, I mean, I know nothing about that. SPY and put calls walls changed? No, but they are sitting around. Actually, what did we hit today? 436. Oh, yeah, that makes sense, actually. These would have increased. So here is the perfect close for Friday. I'll put out the video a little bit later. Yeah, that's... Well, we knew that we couldn't go lower. Probably should have mentioned that at the start. Yeah, we knew we couldn't go too much lower than 440 because we had too many puts that were sitting there for expiration. And we also know that the 460 was too much. So we only have a very small slither for the closure, if that's what it's going to do. And Amazon certainly helped the market pull it through. Anyway, we close here around 1% or a little bit less now for the markets. They have certainly rejigged themselves. I mean, that's basically put on everything that lost today into the close. It's a mass rally thanks to Amazon, pins, and Snap. I'm not sure whether it can sustain. I don't know. The technicals still go bearish here into next week. Non-farm payrolls will get us through. And for anyone that's saying the first non-farm payrolls number is positive or negative or whatever, it means nothing. The market won't move off that. And the reason, because it's flat useless. It's always wrong. Max pain is 450 on the close. Snap is now 41%. Joseph says mind blown. Don't be mind blown about it. I mean, it's a stock that's down like 80%, 70%. So when it goes back up, it looks huge. It is big, but it's only back to where it was a few weeks ago. Muhammad says, Tom, Amazon still has a huge call wall at 3,000. Is that significant in any way? I would say so. Yeah, I think there's going to be it's going to be very interesting tomorrow. Where is it now? 16.68. I would expect it to settle. Let's just look at the facts again. Previous support, very strong. It's trading above there. I don't expect it to be able to hold above this area. It may, but I don't expect it. Amazon up 20%. Should only be 16. Tom, where are we getting the beat percentage for the stuff? Just earnings beats report, which currently still very high, actually. Let's refresh this now. 77% beat rate. So still very, very, very high there. All right, everyone. Well, thank you so much for joining us. Look, it was a wild session. I mean, we may have predicted the short today. We certainly didn't predict that each one of those rallies would be as significant as they were. I knew that probably Prime would be increased. That's the only thing I knew out of all of that. Everything else, I didn't know we'd have a 17% gain on Amazon. Probably no one did. That's why the market did it. And pins and Snap returns are pretty exceptional. If you were in them and you bought those levels, again, pretty tough to do it I can understand why you might have done that based on the fact that Meta is very different than those companies. Most will probably struggle to hold their gains, I think, after the hours and into the next trade, and we move forward to NFP. So most of the big signals on the SPX and the Nasdaq are still pointing towards the downside, at least temporarily. The after hours looks positive. Which one would I trust? I guess the overall picture of what Wall Street's trying to do, but NFP will show us the way. So this will probably give us that really big jolt. It is an exciting time to be in the markets, exciting time to be in scalping, day trading, investing, anything like that. Don't lose sight of the fact that the markets will probably still become positive in terms of investment positive over the next coming months. Remember, we think it's a sell the rumor, buy the fact in terms of inflation, interest rates, all of those things. So we'll continue to update you here on the channel. Please remember to subscribe if you enjoy the content, and we'll see you with a daily video in a few hours. So thanks very much. Big Head says this week has been insane. It certainly has been very big here. Corporate Raider says, bro, I literally bought Amazon calls because I was high. Well, there you go. Well done, Corporate Raider. What are you going to do? Do you have a plan now? Have you come off? And Bureaucrazy says IWM is still very bearish. Yep, IWM still shows the signs of the broader market being bearish. Even post-market's not that strong. And that's because small companies are not doing as well. So the big ones are doing okay. I mean, if you were taking the FANG, really there's only like a Facebook miss so far and Netflix. So we've got Netflix and Facebook missed. Got Amazon hits, kind of. Not really. Not that strong, but it's just been weak for so long. So you've really only got Apple. And I guess we need to put in the M, so FANG or whatever. So Microsoft also does well. His plan is to get high. Well, his plan, he needs to do something. He needs to have his plan. Oh, and we said we'd do oil. Let's just quickly look here. Oh, wow. Oil broke a new high. Nice. So I've been a little bit more negative on oil through this rally. Still got the faith to the 92. But 92, yeah, be careful there. Oil is getting high and close to the end. Very nice. Natural gas decline back down to support. So this is an interesting zone. If you like natural gas, I think it's an insane trade, and you've got to be very careful. But yeah, this is the consolidation area that you hope it turns around in, because previously over on the left-hand side, it was support, then it was resistance, then it rallied, then it shorted, and we're sitting here now looking for direction. George A. Grande, $5. Thank you so much for the support there. What if it keeps, this is corporate raise. What if I keeps running after I sell? Do I get back in? No, unless that's your plan. I mean, you've got to have a trade plan, man. Every trade you usually trade, you should have entry, you should have a take profit idea, and you should have a stop loss. Once you sell, you don't just go running after that stock. That is a massive noob mistake. You go on to the next system-based, your system-based trade, whatever that may be. Don't go chasing stuff. If you start chasing things, you just fall into the trap that everyone was in last year. And how well is that going for everybody now? You know, I've been around for a while. Those SPACs were crap. Those hyper stocks were crap. Weed stocks, unfortunately, are generally crap. Space stocks were a mistake long term. This was all crap. Don't go chasing waterfalls. That's correct. All right. Catch everybody. Chill out. Good luck. And we'll see you next time. Bye for now.